Hello, everyone. Good morning, and depending on whichever part of the world you're tuning in from, good afternoon and good evening to you. As always, I'm very excited to welcome you all to yet another promising edition of our Forex Morning Mastery, the midweek review, as we are delving into the second half of the trading week. My own name is Sheriff Daramola, and for the next 30 to 45 minutes, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. Well, so far this week has been quite impressive for us across the assets we've been monitoring. Remember, we have been monitoring three financial instruments, which includes the USOILSPOT, which we've been able to capitalize on some bearish opportunity in the last 48 to 60 hours. And on the GBPUSD, we were able to also take advantage of some trading opportunities, though the market is still very indecisive at this moment. And finally, my favorite, the XAUUSD, where we were able to capitalize on both buying and selling opportunity in the last couple of days. Well, so far this week, we've done pretty well. And for everyone who has been part of this journey, well done and kudos to you. Today, we are going to be revisiting this chart once again. Let's see how well these assets have been doing so far this week, and of course see how we can manage existing positions while we also strategically position ourselves for today's session. This session is especially crucial as we assess the midweek momentum and position ourselves for the best setups going into the second half of the week. So in today's update, we are seeing interesting shift across key markets. Gold is continuing to react to economic data from the US. Several currency pairs are also showing signs of potential breakout opportunities. So today, I encourage us all to stay tuned in as we break down the charts and uncover high probability trades that could define the remainder part of the week. For those of you joining us for the first time, you are highly welcome on board. Very excited to have you join me. We run the Forex Morning Mastery 3 times in a week. That is Mondays, Wednesdays, and Fridays, where we come together to review the market, see how well the market has done so far, manage our existing positions while we also position ourselves for the next move. It's also important for me to mention that this is not a signal service platform, but an educational avenue where we all come together as a community to have a deep understanding into the behavioral patterns of market participants through the lens of price action and fundamental analysis. So I encourage us all to stay tuned in as we delve into the market. If you have any questions whatsoever, feel free to let me know in the comment section. So you're highly welcome once again. So with that said, we will be diving right into the business. And as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And for those of you who have been with me for a while, this is our usual routine, turning our focus to the upcoming economic events that could shape market sentiments today and for the remainder part of the week. And we all know that by reviewing the economic calendar, we can pinpoint how these upcoming events can shape price action, helping us to spot potential correlations with specific technical patterns on the chart and better time our positioning more effectively. Now, based on the asset we are monitoring this week, we have been monitoring economic features from both the United States and the United Kingdom. And on days when we do not have any high impactful event, we include mid-tier economic features. And of course, so far this week, we are yet to witness any high impactful event, though we had some handful of meaty economic features which we also took into account. And of course, we did talk about this on Monday. As you will see here, October 7 on Monday, we had a bunch of Fed official speeches through Monday and Tuesday's trading session, as you will see here. Then on that same Monday, we saw the BRC like-for-like retail. It's a retail sales data from the United Kingdom that gives us an insight into how well the retail sector of the United Kingdom is doing. And of course, the actual figure came in higher than the previous month, which was at 0.8%. So we had a 1.7% expansion in the retail sector, which is something that we can consider a positive signal for the British pound. But we're yet to see the pound sterling gain some traction despite this effect. Now, based on the bunch of speeches from the Fed officials in the last couple of days, what I'm able to summarize the whole highlight with is that they all acknowledge the fact that inflation is thinning in the United States and that there is a high tendency of cutting interest rate again in their next meeting. Now, where the dilemma is right now is the magnitude of the interest rate cut. Is it going to be a 50 basis point cut just like the previous one, or is it going to be a 25 basis point cut? However, if you look at the CME Fed Watch tool as of this morning, there is I think about 85% chance that the Fed will lower borrowing cost by 25 basis points in November, which is something that will at least influence the sentiment around the US dollar market dynamics today, tomorrow, and the next. However, there are still other couple of high impactful events that we will be looking forward to this week that will definitely bring some fresh impetus into the US dollar market. Now, one of them is coming up today. That is Wednesday, October 9th, and we are looking at the FOMC, the publication of the FOMC minutes. Now, for those of us who are not familiar with this data, you see, once this minute is published, market participants look forward to it as it provides us with insight into the discussions and decisions made by the Fed regarding monetary policy, and this will definitely include interest rate too as well. And it will also give us an insight into the voting ratio of the Fed officials during the last Fed interest rate decision. Those who voted for and against interest rate hike will be seen. We'll see the ratio at which that is, and this will further give us an insight into the sentiment amongst the FOMC member. And this minute here is crucial to market participants' decision because they offer clues about the future direction of interest rates, which can significantly impact the value of the US dollar. Now, besides this, we also have some couple of speeches again from the Fed officials. We have Jefferson, who is going to be speaking in about 9 to 10 hours from now, and then much more later in the day, we will be seeing another speech from Mary Daly too as well. So these are speeches that majority will also want to be looking forward to, as it will give us an market participants will be dissecting their rhetorics to see what the future monetary policy decision is going to be like. Then another important event that market participants will be looking forward to is coming up tomorrow, the Consumer Price Index, another inflationary data that measures the average change in prices of goods and services. And this is something everyone will also be looking forward to as well. Then on Friday, we will be looking at the Producer Price Index, another inflationary data there is, which measures the average change in prices that producers receive for their goods and services. Then on that same day, we will be looking at the Consumer Sentiment Index as well. So these are very important events to look out for, and interesting enough, they are going to be coming in the second half of the week, where we may likely be seeing some high level of volatility ahead of the weekend. But since today is Wednesday, let's see how today's event will be influencing the sentiment in the market. And of course, we want to see how market participants are anticipating this event. Now, with that said here, we will be diving into the first assets on our watch list. And the first asset we are looking at this morning is going to be the USOILSPOT, right? So on the USOILSPOT, we've had quite an interesting situation so far. And we, at the beginning of the week, we had the privilege of buying the USOILSPOT. Then yesterday, we were able to sell as well. We saw price drop into the $74 area, and price action had kept a range bound structure in the last 12 to 18 hours or so. For educational purposes, let's take a pause and rewind back to the beginning of the week, and let's see what really guided our decision making around this market dynamic. So as at the beginning of the week, the first thing we observed here was the fact that price action was indeed trading above our key level, which was situated at the $67.50 area, remember? And before I even go further, I need to mention this. I will only be deliberating on the 1 hour time frame, which is our execution time frame. I already done a top-down analysis on all of these assets we are looking at. So if in any way you missed out and you do want to have a background knowledge of how we got to this point, I would encourage you to watch my Monday and weekend videos to have an insight into this. Now, with that said, let's go back into the structures. So at the beginning of the week, the first thing I observed here was the fact that price action has been finding series of higher lows since last week Tuesday. So we had the privilege of capturing the ascending trend line, which also played a significant role in guiding our trading decisions during the first couple of days. Then in addition to that trend line was the fact that the week started on a bearish note. As you will see, price started around the $74.69 level, dropped significantly into the structure before buy pressure resumed around this area. And I can remember mentioning that I already placed a buy position around this area. I bought earlier than before the session began. And then with the appearance of this range bound structure, where we had price confined within the $74.69 level and the $73.60 area, we were looking forward to price either breaking out of the structure or breaking down the level to give us an opportunity to either buy or sell. So to give a visual representation of what I'm talking about, I was saying here that we were looking for price to either break down the support line of the range bound structure to give us an opportunity to sell, or the breakout of the resistance line of that structure to give us an opportunity to buy. And of course, we bought early enough. And I did mention during the live session on Monday that for those of us who had missed out on that buy position, that let's see if price will come back to retest any of the structures we identified. If you remember vividly, price action was somewhere right above the $75.50 level. And I did mention that we want to see price either come back to retest the $75.50, the $74.69, or the $74 area, where the reemergence of buy pressure will give us an opportunity to join the uptrend move. And what happened here was quite interesting. I think about an hour or two after our session, we saw price drop back into the $75.50 level, and then we saw price climb to the upside, giving us the privilege of joining that uptrend move. So for the first day of the week, we were able to capture almost a minimum of 350 pips thereabout if you're only taking one position. And for me, I took about 500 pips after moving my stop losses. Price came back down, took me out of that position. Now, during our lives my commentary yesterday, I mentioned that we are at a critical juncture where we saw price retrace back down into the structure again. And for those of you who saw my commentary on this on the USOILSPOT on my Telegram platform, I mentioned that we want to exercise patience around the $75.50 level to see how the market is going to react to that structure. And if there is any reversal pattern there, we will be joining an uptrend move. And personally, I did join a buy position around that area, but unfortunately, I was taken out of that position before price did break down, retest the $75.50 level and that trend line to inside a selling opportunity. And I think I closed my commentary there. I think I remember doing so, that if this ascending trend line here is going to be playing a significant role in guiding our trading decisions for yesterday, if price is maintained above the ascending trend line, we will maintain a bullish bias. But if price breaks down the ascending trend line, then we will start considering selling. And if you joined that bearish move, well done to you on that one, as we saw price drop significantly into the $72.50 area with a total of approximately 300 pips before the buy pressure resumed. And for me, I got taken out of the position after moving my stop losses to $74 area, closing that sell move with minimum of about 150 pips. So I hope you are all out of this trade right now. You know how we do it in this community. As long as price moves significantly well in our favor, we move all stop losses to secure the position. And if you have done that appropriately, you must have been out of all sell positions at this point. Now, with the way things are going right now, what is going to be our plans for today? And in fact, if you look at the chart from a technical standpoint, especially since the later part of the New York session yesterday, you would have noticed that price action has been trapped, confined within the $73.60 level and the $74 area to emphasize the prevailing uncertainty in this particular market. Now, before we even go further into those technical details, let's talk about the influence, the market driver that influenced the sentiment in the market, at least in the last 24 to 36 hours. Now, one of the things we need to also take into account is why is it that oil prices dropped significantly despite the geopolitical tension in the Middle East at this point. Now, one of the major reasons I see from the reports I've gathered so far is the disappointment over China's stimulus. Remember, China has been on a 2 weeks holiday, and everyone was anticipating the resumption with high note that the Chinese finance sector will be announcing some very palatable stimulus. But what came in yesterday as at the resumption, we didn't really see anything, and this really caused some disappointment amongst market participants. And the lack of fresh stimulus measures from China, which is considered to be the world's largest crude oil importer, contributed to that downside we saw here. And not until this morning we begin to learn that China is trying to pump in about 2 trillion yuan ahead of the month's GDP. So that is on October 12th, which is something I think is a considerable signal for buyers to build up some potential uptrend scenario. Now, besides this Chinese stimulus saga of a thing, the potential attack on Iran, as we all know, it has been ongoing for a week now. There has been fears of a potential attack on Iran's oil industry in retaliation for Iran's missile attack on Israel last week, and this could further support oil prices going forward. So buyers are still banking on this potential attack to maintain their bullish idea in this market. And coupled with the geopolitical tensions in the Middle East, the chances for buyers are still there, so we cannot ignore the potential of buying the US oil spot at this point. However, if we look at other factors behind the scenes, majority of them is influencing a downtrend scenario. We are talking about the US crude oil inventory. Yesterday we saw the crude oil inventory rose by 10.9 million barrels. That's far exceeding the expected increase, which could add more selling pressure to the crude oil. Now, for those of us who do not understand the dynamic of crude oil stockpile, let me quickly explain something to us here. Now, if the crude oil stockpile is high, like what we saw yesterday, it shows that the supply in the market is higher than the demand. That means there's been global supply, high global supply, and the demand consuming the supply is very, very low. So they could afford to keep some oil in their stockpile. And in fact, we saw a 10.9 million barrel rise. Now, if this is going to be the case, then what's our simple economics tells us that when there is high supply and low demand, what happens to price? Price tends to drop. And this is one of the factors that influence the bearish momentum we saw in the last 12 to 18 hours. Now, in addition to that is investors are pulling back their bets on oil prices spike due to lack of further escalation. And lately, we learned that Hezbollah is willing to take a possible ceasefire if negotiations are favorable, which is a very positive sign that this tension could probably be reduced in the next couple of days. And if it's something that could hold on, we could see price of US oil drop significantly as the concern for supply disruption from this area will reduce in the market. Now, taking all of these factors into play, what are the chances buyers and sellers have today as we look at the chart from a technical standpoint? Now, looking at the chart here, like I did say earlier, we've seen that price action has been consolidating in the last, let me count, let me just be precise here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 hours. So in the last 16 hours here, we've seen price of US oil consolidate between the $73.60 level and the $74 area, emphasizing the prevailing uncertainty in the market. Well, this is not coming to me as a surprise. Remember, we are looking forward to the publication of the FOMC minutes coming up later today, and this is one major event that market participants are looking forward to decide on the future of interest rates in the United States. And considering the US dollar being, US oil spot being a US dollar denominated asset, whatever happens to the US dollar will definitely influence the dynamic in this market. Now, with the situation here, our center of focus today is going to be between this range bound structure, and in fact, let's take an holistic view into this area. Remember, at the beginning of the week, this was exactly where the bullish momentum started this week. Remember that area between the $73.60 and the $74 area. So for me, I will consider this area as a demand zone. It's an area that has a strong memory for buying power. In fact, if we go to as far as last week Friday, we saw how buy pressure resumed from there. And at the beginning of this week as well, we saw price pressure resume again. And right now, price action is back into that area. And we have seen that the last 12 to 18 hours, I've seen sellers stocked here as they couldn't continue the downtrend move. So for me, I want to keep my buying options open around this area, while I will be looking out for buying opportunities above the $74 area. Now remember, our stop losses will be right below the previous low, so we want to make sure we have enough breathing space for price action to move around. So we are looking at between 55 to 65 pips of stop loss on the buy position above the $74 area. Now, if price continues to climb and find new highs, we're looking at more opportunities to buy at the breakout of the $74.69 level, adding more at the breakout of the $75.50 area. And if it continues, we have the highest point this week at the $77.70 to maximize the potential of this bullish move. Now, while we're looking out for buying opportunities above the $74 area, there is something here I would like us to take into account. Now, if price action moves and it moves into this area around the $75.50 level, it's important that we exercise patience around the $75.50 level before joining that uptrend continuation. And why is that so? Well, if you look at what we have here, we have a trend line which was breached yesterday, a couple of trend lines. We have the first one right here, and then we have the second one right here. Now, should price come into this area, there is a possibility that price could form a reversal setup around this area to incite a downtrend continuation, which could be a retest of the structure that was broken yesterday. So we really need to see some significant confirmations like breakout retest of the $75.50 level. In fact, I would love to see continued buy pressure around this area, showing me signs that sellers are finding it difficult to maintain momentum below the $75.50 level before I can join an uptrend move. So that is how we are going to be managing any form of bullish bias on the US All Spots today. Now, in as much as we're looking out for buying opportunities above the $74 area, please always remember that as soon as price moves significantly, move your stop losses, secure your position, worst case scenario break even, so that when price continues to the downside, the worst case scenario we will be closed at will be at break even. Now, with the bullish bias set, what are the chances that sellers could come into play here? Well, if we are going to be selling the US All Spots today, I want to see price break down and retest the structure. Now, the reason why I will need a retest, I need a retest for confirmation, is simply because of the buying power that is around the $73.60 level and the $74 area. So I want to say something convincing that truly buyers have lost the steam before I join a bearish move. So if I do want to sell below the $73.60 area, I want to see something like this happen. First of all, price break down the structure, then price comes back to retest structure. Most of the time we can see this on our lower time frame, like the 5, 10, 15 minutes time frame, where continued selling pressure below this area will be a very good opportunity to continue the downtrend move. So this is how we are going to be managing our trades on the US All Spot today. Our center of focus is simply between the $74 and the $73.60 area, where depending on the direction of the breakout will determine where price is likely going today. So I do encourage us all to mark out this level. It's a very important structure we are going to be using to navigate today's market dynamic. So this is my simple view on the US All Spot. I hope I made myself very clear. If you have any questions or you need some clarifications, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And don't forget to give that video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. And always remember that your likes are one way of you supporting the channel, supporting the community to grow. And if the like can tally with the number of people on board, this video has a privilege, and the YouTube algorithm will push the video to a wider audience of traders who may find the content beneficial. And thank you very much, guys, as you do so. So let's see if there are any questions before we move on to the next asset. Hello, Jonah Haruna. Good morning to you. Glad to have you around. Trust you're doing very well. All right, all right. So, in the absence of no questions, I want to assume that we are all on the same page. And I do hope you've marked out these levels accordingly on your chart. Like I did say, our center of focus today is between the $74 level and the $73.60 area, where depending on the direction of the breakout will determine where price is likely going today. So let's see what happens today on this one. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD, that is the British pound against the US dollar. And in fact, it is quite obvious that the last 48 to 60 hours in this market has been a little bit choppy, as there is a cautious sentiment amongst market participants, as you will see, despite the fact that the US dollar remains strong near a 7-week high, supported by diminishing odds of aggressive rate cuts from the Federal Reserve. Bearish traders appear to have held off on aggressive bets ahead of the FOMC meeting minutes, which is going to be published later today, and of course other upcoming US economic data, which could shift market direction. So I strongly believe that major key players have stepped aside, waiting for this data to come in before making any aggressive bet at this point in time. And as a result of this expectation, you can see how price action has been trapped within this range bound structure, further emphasizing the prevailing uncertainty in the market. Now, for those of us who had sold the GBPUSD, remember we sold the GBPUSD on Monday after price action broke down, retested the 1.31040 area, which happened to be the support line of that range bound structure we identified at the beginning of the week. And we saw price moves maximum of about 45 pips. Didn't really move that much before we got taken out at break even. And for those of us who stayed persistent with the selling momentum, you could still have a sell position running at this point in time with a minimum of 25 pips in profit. And if you really do have a sell position running, please, I would encourage you to move all stop losses to break even at this point. I personally am out of all sell positions as at yesterday. I wanted to see how the market will play around this current range bound structure we are seeing now. And if we take into account the fundamental factors behind the scenes, remember we talked about the Bank of England Governor Andrew Bailey's comment last week, where he suggested that the central bank might cut rates more aggressively if inflation continues to show improvement, and this could influence a decline in the British pounds if data continues to show that the inflation in the United States is pretty high. And from the economic data, I'm not sure we do have any impactful event whatsoever from the United Kingdom anytime this week. Okay, we have some mid-tier economic features like the GDP, the manufacturing production and industrial production, which are all coming in on Friday. Besides this, there are no other events that majority will be looking forward to from the UK. So it's more like this week it will be driven by economic event from the United States. Now, with that said, the pound sterling appears to will be at the mercy of whatever happens on the United Kingdom. And if we take this into account, I still strongly believe that the path of least resistance remains to the downside, taking into account the US dollar strength right now, which remains at a strong near 7-week high. And for those of you who are part of my Monday session, remember I shared some beautiful updates with you on the DXY, the US dollar index, where I did mention that the US dollar is within a range-bound structure with a tendency of evolving into an uptrend continuation pattern after this impulsive move that brought us to this point. And one of the things we said here that could incite for the uptrend scenario is the breakout of that resistance line. And for me yesterday, I begin to notice the potential of that breakout as soon as price broke out of this descending trend line within that range-bound structure. As we saw here, price broke out of the structure a couple of hours into the New York session yesterday, came back to retest the structure, and it continued the uptrend move. So for me, the path of least resistance still remains bullish for the US dollar. And I think with this, we could see the British pounds drop significantly to the downside. Then what other factor here again? Okay, let's talk about the geopolitical tensions and the China stimulus. The escalating tensions in the Middle East and disappointment with China's stimulus package could further weigh on the British pounds. It's something that could also be a headwind for the British pounds at this point. So technically speaking, I will suggest that we exercise more patience around this area, considering this consolidation phase. And in fact, I can see an ascending trend line just right within the consolidation phase, which has been broken right now. And we have seen price break down the trend line, come back to retest structure, improving the chances that price will go to the downside. So I strongly think that it's due to the anticipation of the FOMC minutes coming up today that has resulted in these choppy market conditions. So selling the GBPUSD for me, from below the 1.30600 area is a very good opportunity to start looking out for selling opportunities on the GBPUSD. So we shall see if the price will break down, retest the 1.30600 area, then we join the bearish move to the downside. And considering the fact that the market still remains an uncertain environment, we cannot actually predict to the letter that price will really go to the downside. If the contrary happens, we never can tell what the FOMC minute will be all about and how the market will react to it. But if the contrary happens and buy pressure begins to resume on this chart, I will only look out for buying opportunities at the breakout retest of the 1.310400 area. So like we did identify on the USOILSPOT, we have a range bound structure, though this one is quite wider than what we saw on the USOILSPOT. So we're looking forward to buying opportunities at the breakout retest of the 1.31040 area, and of course looking for selling ideas below the 1.30600 area. Now, due to this uncertainty in this market, I would encourage that we wait for significant follow through before jumping into either a bullish or bearish opportunity. So most of the time when price action gets close to either the support or resistance line, let's scale down into our lower time frame, the 5, 10, 15 minutes time frame, to look out for significant confirmations like breakdown, retest of structure, continue selling pressure below or around the 1.30600 level to join the bearish move, and a breakout, continue buy pressure above the 1.31040 level to continue the uptrend move. So let's see how the market will play out. And I did mention earlier that for those of us who have a sell position running, please move your stop losses to break even as we anticipate the publication of the FOMC meeting minutes. So this is my simple view on the GBPUSD for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. I will take the next 5-10 seconds off before we move on to the final asset on our watch list. Stay tuned in. All right, so I see your comment here. Constant Tameklo. Good morning to you, Tameklo. It's been a long time. I see you. How are you doing today? All right, Tameklo says here, when you take the second buy, do you put the stop loss at the same place as the first entry? What do you mean by that? Which asset are you talking about? Are we talking about the GBPUSD? I'm here to buy on the GBPUSD. Or are you talking about the US oil? Let me see. Let's check the US oil and see what you're talking about there. So let me look at that question again. When you take the second buy, do you put the stop loss at the same place as the first entry? Okay. So let's say we buy at the 1.3104, right? If we buy at the 1.31040 level, right, and then we have our second entry at the 1.31345. Now, for those of you who are part of the Go-Go Challenge, my approach to scalping the market is almost similar to how I run my swing trading approach to as well. It's just that the time frames are quite different. Now, if I buy around the 1.31040 area and price moves significantly in my favor and price continues to climb, triggers my second buy positions here, I move my stop loss on the first entry to somewhere around the entry point just to secure that one, and then allow the second one to run. And if it gets to a point where it gets a third trade trigger, I move my stop loss of the second one to break even area while I allow the third one to run. So that's how I do it. Now you are asking if my second entry, my stop loss for second entry will be at first entry point. Well, it depends on the previous low. So if the previous low is around the first entry, that's where my stop loss for the second entry is going to be. But if the previous low is somewhere around the 1.31170 area, maybe somewhere around here, that is where my stop loss for the second entry is going to be at. So it's subject to the previous low that we identify on the structure at that particular point in time. So it varies depending on what the structure is saying. I just hope I made myself clear. I hope I'm attending to the question in the appropriate manner. Tameklo, please let me know in the comment section if I did answer that appropriately, and if I didn't, let me know. I will do more justice to it. All right, so with that being said here, we shall be moving on to the final asset on our watch list. Stay tuned in. All right, so the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD popularly known as the gold spot. And what a wonderful week we've had so far. We've had the privilege of joining both bullish and bearish opportunities during the course of the week, all of which are done pretty well for us all. And congratulations to everyone, and for those of us who stayed faithful to our analytical approach. And on the Go-Go Challenge, for those of us who are part of the Go-Go Challenge, we've done pretty well so far this week, scalping the XAUUSD market. And well done to everyone who has been part of this profitable journey. Now let's quickly run through the market. Let's look at things from a technical standpoint. Let's rewind back to the beginning of the week, what has guided our decision making so far this week. Now at the beginning of the week here, remember we had this structure identified after we saw a range bound structure at the beginning of the week. Price started the week on a bearish note, came to structures, broke out of this resistant line. We got taken out at break even on that one. Then market went through a choppy market condition which lasted about 12 to 18 hours or so before remember yesterday we joined this bullish momentum yesterday. For those of us who were part of this, we joined this move all the way to the upside, and I did give us a new structure in anticipation of yesterday's trading session. If you remember, I think it was on the 15 minutes time frame. Yes, I guess on the 15 minutes time frame we added a new structure here. So this was the structure we were looking at as at yesterday, an entirely new structure. We marked out the fact that since Friday, price action had found lower highs, you can see, and when we connected a series of lower highs, we have this couple of descending trend line emphasize the strength of the sellers. However, something interesting happened here. Despite the lower highs, we can see that price was yet to break down or find a lower low. And as a result, we had a beautiful demand zone around the 2,630 and the 2,635, where since last week Friday, we saw how buyers keep coming in, negating all attempt by the sellers to break through that area. So as a result of this observation here, we decided to buy again around the 2,635 area. For those of us who were part of this yesterday, we joined this 2,635 area. Let me zoom out so we can see things clearly. Then we added another position here. This was inspired by the setup we saw on the 5 minutes time frame during the Go-Go Challenge yesterday. We added another buy position at the 2,640. Then we added another one at the breakout of the 2,645. Remember, I updated us again that we should move all stop losses, secure position. Then we added another one at the $2,649.50 level. And for those of you who are part of the are with me on both my TradingView and Telegram platform, remember that as soon as price action got into this trend line, that was about a couple of minutes into the New York session, I did tell us that we need to exercise patience around this area to see how the market is going to be reacting to this trend line. So we were looking at a potential breakout or a reversal setup around that area. So we were looking at buying at the breakout retest, which we actually did. Price broke out, retested the structure, moved about 41 pips thereabout before the bearish momentum came in. And as soon as price broke down the 2,649, a retest of structure incited a sell-off for us, and we rode that momentum all the way down into the $2,608 area, giving us a whooping 400 pips move there. But I only had two positions on this one for yesterday, sold at the 2,649, and then added another one at the breakdown of the key level at the 2,630. So for those of us who are part of this profitable journey, well done and kudos to you. At least you must have taken a minimum of 500 pips on that massive sell-off from yesterday's session. So well done once again to you guys. Now, as we head into today's session, we're beginning to notice some interesting development going on right now. In fact, I already have a couple of buy positions triggered as of this morning. And for those of you who will be part of the Go-Go Challenge, you will be seeing how this has been triggered and how we are going to be scalping through this market as we see buy pressure resume again. Now, in preparation for today's session, you will see that since the later part of the New York session, we begin to notice that sellers, though had found strong momentum during yesterday, was unable to break through the $2,610 zone, which for me is going to be considered as a temporary demand zone going forward. And in fact, I do have a new setup that we are going to be using to navigate today's market. Now, before we go into those technical details, let's look at the market drivers for today, the positive and negative ones. Now, from what is going on behind the scenes, everything is pointing at a downtrend continuation. From a strong US dollar, which remains very strong as traders reduce bets on aggressive Fed easing, which of course has been putting pressure on gold prices and other safe haven assets. And of course, we also have rising US Treasury bond yield, which is staying above 4% and continues to put pressure on non-yielding assets like gold. Then another factor that we cannot also ignore is the market sentiment, which was weighed down by the limited extent of fiscal stimulus from China, dampening optimism around commodity demand. And China being one of the major purchaser of gold commodity, it's going to be a red flag for buyers in this market. Then secondly, China, the report that came out yesterday from the WGC informed that China did not purchase gold in September. So this is like 3 or 4 months straight China has stopped purchasing gold, which could influence the market dynamic negatively. And if we take all of this into account, in fact, the geopolitical tension, which has been one of the major factors that the gold has been banking on, is already showing signs of potential ceasefire between Hezbollah and Israel. Now, remember I said earlier that Hezbollah is already hinting at the possibility of a ceasefire if terms and conditions are favorable, which could ease geopolitical tension, reducing the risk premium on commodities like gold as well, hereby exerting a lot of selling pressure. So for me, I'm still very, very skeptical about these bullish buyers, but let's see how the market is going to be reacting to our new structure today. So for today's session, I've already identified something new that will be guiding our decisions today. I think I did updated us on my TradingView and Telegram platform this morning. So for those of you who are part of my TradingView and Telegram platform, this was what I shared with you this morning. And while looking at the structure, this is what I did after taking into account the character of price action since last week Monday. Now, the first thing I saw here was this descending trend line, which obviously had played a significant role in guiding the direction of price action. This trend line here at some point prior to this week was serving as a demand zone. As you will see, whenever price comes into the structure, we see buyers push price up, though price has been finding lower lows and lower highs along those particular structure, giving us a beautiful descending trend line. And finally, yesterday we saw price do a final and the first time breaking out of that support line of the descending channel for the first time in about a couple of weeks now. Now, with this situation here, price has broken down the support line of descending channel. Price has broken down our key level for the week, which is situated at the 2,630. And you know, whenever we have price below our key level, it's reasonable that we look out for buying opportunity. Now, the question here is now, From a technical standpoint, are we going to see price come back to retest the structure in an attempt to continue the downtrend move? Well, it's a possible move, which we've seen a retest multiple times so far. However, I'm noticing something interesting here, which might negate sellers' attempt here. Now, if we take into account this impulsive bearish leg that started yesterday, you see that that area between the 2,604 and the 2,609 has been limiting all bearish expectations. And this for me is evolving into what may look like a reversal pattern in the form of a double bottom structure. Though it is yet to mature, it is yet to be validated, as we will need price to break out, retest the neckline of this double bottom structure, which I have identified along the 2,625 zone. Now, one interesting thing about the neckline is how it beautifully lines up with this descending trend line. So if price will climb back above this descending trend line and that neckline, I'm willing to continue the uptrend move. So that is what I'm looking at to join that bullish move from a long-term perspective. But scalping the market, I already triggered a buy position. I think 2 buy positions. You will see it in my go-go challenge. We had 2 buy positions here already, and it's running with about 66 pips thereabout in profit, which I took. So I'm hoping that this momentum will continue in such a way that it breaks out, retest both the neckline and that descending trend line to continue that uptrend move. So that is what I am looking at from this particular perspective. Now, another thing I would like to say here, despite the fact that sellers are finding it difficult to break through this demand zone, I'm looking at what will happen if price gets into this trend line. Now, if we begin to see signs that buyers are finding it difficult to break out of the neckline, and this descending trend line continue to exert selling pressure, then the emergence of selling pressure and the inability of buyers to break out of that structure will be all we need to join a downtrend move. So we will sell if we see structures like double top, head and shoulder patterns around this confluence between the 2,625 and that descending trend line to join a downtrend move. So we need to take note of that area. So for those of us who had bought earlier, let's make sure that as soon as price gets into that confluence, move all stop losses, secure your buy position, and let's wait to see how the market is going to be reacting to that structure for new trading opportunities. Now, if price does not get to that area, that is, if price does not go this far, and instead it breaks down the 2,609, retest the structure, we'll have no other choice than to take a sell, as price would have taken out all the buy positions within this temporary demand zone identified here. So it's a simple setup we've identified here on the XAUUSD 1 hour time frame. Let's see how the market is going to play out around this structure. And if there's anything new, I will definitely be giving us updates on both my TradingView and Telegram platform. So this is my simple view on the XAUUSD today. If you have any questions whatsoever, feel free to let me know in the comment section. If you need some clarifications, I am here and willing to be of help in that regard. And do not forget to give that video a thumbs up. Your likes are valuable to me and also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial. Thank you in advance for doing so, and I look forward to seeing you in about 10-15 seconds from now. See you soon. All right. I see your comments. Sahid Nasir, good morning. I'm doing very well, thank you. So you said here that I should explain the impact of FOMC meeting minutes on gold today. Well, I talked about this earlier when we were looking at the economic calendar, but it's okay. I will run through it again. Now, it's important for us to know what the FOMC minute is all about. Now, remember, the Fed did an interest rate decision last month, and during that interest rate decision, they hiked rate. Sorry, they reduced interest rate by a whopping 50 basis point cut. Now, during that meeting, a lot of things went on behind the scenes which we are not aware of. The public is not aware of before they decided to cut that interest rate. Now, in that meeting, there was a minute written. So that minute that was written during that meeting is going to be published today. So in that meeting, in that minute, we are going to be seeing a lot of things that went on behind the scenes that will definitely give market participants a clue into how they will be positioning themselves for the next move. Now, in that meeting, in that minute, we are going to be seeing the number of votes that favor the 50 basis point cut. Now, there are 7 members of the FOMC, and all of them are going to be voting for or against an interest rate cut or an interest rate hike. Now, if we have all of them voting for the seven of them voting for interest rate cuts, which turned out to be a 50 basis point cut, it will tell us that the Fed officials are more or less leaning towards more rate cuts, and that there is a sign that inflation is really dropping significantly. Now, this data today that will be released today will provide the market an insight into the discussions and decisions made by the Federal Reserve regarding their monetary policy, and it will also give us clues about the future direction of interest rate, which can significantly impact the value of the US dollar today. Now, if this report shows that Fed officials are leaning towards are confident that inflation is dropping, then there is a high chance that that interest rate will be cut next month. And if interest rate is cut, what happens? That means the value of gold is going to rise, because when interest rate is cut, investors will start dumping their US dollar to buy non-yielding assets like gold. So, but if this report shows that inflation, they are not even very sure that inflation is dropping, then we could see the potential for maintaining the current interest rate or even increasing the current interest rate, which will obviously favor the US dollar. So, and if that's going to be the case, we may likely see the value of gold crash to the downside. So these are things that will be influencing the sentiment around this market today. So that is why it's important that we also look into this report to have individual detail into what may likely happen. And of course, I will be giving us updates on this one tomorrow on what they have said so far. So I hope I made myself clear on that one. Saeed, do I make any sense? If I don't, please seek further clarifications. I'm willing to be of help in that regard. And you also said here that tell us how should able to identify the demand. So we've been talking about this countless of times. We've talked about this is a demand zone here. We see that sellers are finding it difficult to break through. And if sellers are finding it difficult to break through, what does it tell us? It tells us that buyers are coming in. So if sellers cannot break through this area, it simply tells us that buyers are coming in to push price further to the upside. And that is limiting the seller's potential. So it means that that area is a demand zone. That means there are more bidding around that area. There are more buying around that area. Price keeps going up from that particular area. So that makes it a demand zone. But if price continues to drop from a particular area, that is a supply zone. Just like here, we saw that as soon as price gets here, we see price drop to the downside. Price drop to the downside from there. The same thing happened like a couple of hours ago. Price dropped to the downside. So what this simply means is that this area here is a supply zone, as buyers find it difficult to break through that particular area, just like the way sellers are finding it difficult to break through this particular area, making it a demand zone. So I think I made myself clear on that one. If you have any questions, feel free to let me know in the comment section. So with that said, I think all right, you are very much welcome, Said. I'm glad that was useful. All right, so in the absence of no further questions, I want to assume that we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys, and this week we've done pretty well this week so far, and I'm looking forward to continuing the momentum we have started this week with as we delve into the second half of the week. So today we were able to check on all of the assets we are monitoring for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, where we were able to identify simple trading setups that we are going to be using to navigate the market today. And I do hope you guys marked out these levels accordingly, as we have done, as they will be playing a significant role in guiding our decisions today. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we have discussed so far. If you have done so, well done. Looking forward to seeing more of you same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets are doing and of course prepare ourselves for the final trading day of this week. And always remember, very, very important, that every decision we make is an educated guess until price action hits your TP target. So with that said, with that in mind, you do want to be having a well-defined risk management strategy in place. So please, let's ensure that we have one. Make sure you have your stop losses, very, very important. Make sure you risk something your emotions can manage. Risk a particular percentage of your account that your emotion can manage. That is, if the trade does not go your way, you are okay and ready to take more trades if the market does not go your way the first time. So it's on this note I want to wish us all the best of luck. Go challengers. I'm going to be with you in the next 30 minutes. We are going to be scalping this market again, looking out for more buying opportunities around this area. At least let's see how much we can take from this range before price finally breaks out of this 130 pips range before the FOMC minute is published. So I wish us all the best of luck, guys. Do have a wonderful evening. Trade smart, trade consciously, and do have a beautiful evening, everyone. Bye.